You're listening to Real Investor Radio with Craig Fuhr and Jack Bevere, where we cover advanced real estate investing topics to help you stay ahead of the curve in your real estate investing business. Well, hey, everybody. Welcome back to Real Investor Radio. I'm Craig Fuhr with famed investor Jack Bevere.
Hey, guys. How's it going? Good to see you, Craig.
It is great to see everyone. Jack, good to see you. This is episode, where are we here? Episode 19. We're currently recording in the month of October. These should be out very shortly for everybody. And in our last discussion, if you guys didn't catch it, you probably should. We talked at length, Jack and I, just this time, no guest. We talked sort of about our feelings on the economy, just really a big sort of a macro and micro talk on predictions, what we're seeing currently, sort of the trajectory of the country over the last 20 plus years. And I would invite everybody to go take a listen to that episode. And then honestly, give us your thoughts. Love to hear from you guys. Reach out at craig@craigfuhr.com or jack@thedominiongroup.com. Send us both some comments or just comment anywhere you might in either YouTube or on the platform. So Jack, today, really love to have a discussion about short-term rentals, the emergence of the market, sort of the players within the market, the whys of why we think it became such a thing, really very quickly and overnight, and where it's going, the ups and the downs, and so let's just jump in, man. I'll let you start on this one. So yeah.
So the short-term rental, I would say now industry has really emerged over the past 15 years. I think Airbnb was started in 2008, around that time frame. The idea at the time being, one of the big trends in tech was that to find anything that was on Craigslist and put a tech packaging around it and automate it so that people could do it on a more platform basis rather than going to Craigslist. And so couch surfing which was a thing on Craigslist back in the day, turned into the short-term rental business where, which it started with, if you have an extra bedroom, you could, bring someone in and offer them a cheap place to stay at night. But then as the consumer got used to that idea and that didn't become such a weird issue and, the security concerns, people just got over it. It became a great way to get very high rent per square foot on either a nightly basis or for longer stays as well. And so, entrepreneurs have kind of taken that 6 ways from Sunday in terms of niche models to be able to increase the rent per square foot that they are getting with some additional operating load, right? Like there's more operations to a 3-day lease than there is to a 12-month lease for obvious reasons. But given the extra rent per square foot that you can get, it's been a very, very profitable strategy for a lot of investors. And some folks have kind of used it as a strategy, an arrow in the quiver for a particular situation. They may have, 30 properties and 3 of those are Airbnbs or VRBOs. And other folks have made it an entire business model where they're almost hoteliers, really, right? They're really.
Is there any significant difference, Jack, between Airbnb and VRBO?
I'm sure there is. I think that the Airbnb market generally is just marketing to a younger audience than VRBO. I think VRBO tends to be tends to have an older demographic to it. I think less investors are on using the VRBO platform. So the data around this has actually gotten really interesting. There's even now a very popular data company called AirDNA.com or .co, that says that they monitor all of the short-term rental sites and can give you a sense of what's going on in the market in real time. Because, that's a pretty heterogeneous market. Properties come off the market, come on and come off based off of frankly, owner preferences as to when they want to put stuff up there. So the supply and demand, trying to figure out the supply and demand dynamic for a particular submarket given the the unique offerings of your property is a tough lift. It's a heavy lift, and so AirDNA tries to help folks do that better. So and then when COVID hit, I think the industry got a huge burst of interest because folks were looking to it was a way to vacation without going too far, and the traveling nurses became a theme and a thing,
An
and
investment theme at that.
yeah, and then real estate investors responded to that. You could rent your place for a month or 2 or 3 months, and so that was kind of a nice in between, right? You didn't have to be super hands on and like getting a phone call at 11 o'clock at night from somebody who was concerned because the heat wasn't working. On a Friday night, right? You could at least get like a 2 month lease out of somebody who was just in the area for work.
And
So
generally at a much higher return or rent than you would if you were to get a market based tenant.
yeah, absolutely. So, I mean, I think we've seen like a tremendous amount of creative strategies for real estate entrepreneurs who have created very special properties to get premium rents, and there's some extremely talented entrepreneurs that have really kind of come on the scene in the past 5 years, 3 years specifically, around this business model. Now, there's an argument that it's from a risk point of view, it's not pure residential, right? Because these are not 12-month leases. These are vacation rentals. So it's a bit more in the hospitality realm than it
Yeah.
is purely resi. And so
Yeah.
with that comes some different risks than kind of your core resi. And so, given the kind of the macroeconomic environment they're in right now, there are some concerns about the short-term rental business. There's been a lot of articles that I've seen, headlines saying Airbnb bust ? To get you to click. So there are some concerns as to going into the next 12 months how that business model is going to do. Is it going to
Yeah.
hold up? So Craig, talk to us a little bit about what you're seeing.
Yeah, man. Well, before we get into sort of where it's going and the people talking about the crash and the bust of Airbnb, one of the things that I think has always concerned me about that evolution of it is it started exactly the way you said it did. It was, hey, I got an extra room in my house, or I got a basement and I can put somebody down the basement. And while that feels a little crappy, I could use the money, and man, the money that I could get for that it's pretty insane. And I think you're right. There was initially that stigma, at least I certainly was like, I would never do that. And then it just becomes a thing where, well, it's perfectly acceptable now. And I actually knew I knew a woman once in Arizona. Funny story, Jack, that she needed some money, and she was out of work, and she decides she's going to do an Airbnb. She's going to purchase an Airbnb. What she didn't tell me was, she said, I'm very excited. I just got my first Airbnb customer, and I think they're going to stay for like close to a month. I'm so excited. And I said, well, that's fantastic. Tell me about the house. She goes, it's the house that I live in. And I said, where are you going to live? And she said, I'm going to go take my camper out to the middle of Arizona and live in my camper with my 2 dogs. And I'm like, that's not a business plan. That's not how Airbnb, that's not the strategy. Like, so I think that Airbnb, in terms of sophisticated operators and versus not sophisticated operators, and sort of the evolution of Airbnb evolved into this thing that I find a little bit alarming. In fact, I was just at a house just 2 weeks ago, Jack, where I was well, I won't say why I was there, but this house was literally in the middle of a county neighborhood here in Maryland. This is where I wasn't on the Eastern Shore where Ocean City, Maryland is. I wasn't up in the mountains where Deep Creek Lake is. This was not a vacation setting. This was, you know, white collar neighborhood, house just sitting in the middle of nowhere. And this guy I was speaking with was going to Airbnb it. And I said to myself, who wants to stay here? why would I want to stay in this house? Why would I want to rent this house when I could, for a short term? And that's what I find was this evolution that I saw as sort of a little bit alarming. That like people, these folks would go buy houses just sort of anywhere and assume just because they threw it up on the Airbnb platform that it was going to be rented for $400 a night. In fact, that may be true, but I don't see the big market of, hey, I'm just some Joe Schmo and I need a big market of houses located in any neighborhood. I always looked at the model as it was a room, or it was maybe a house near a college, or something like that. And that was I guess, maybe you could speak to that in terms of how it evolved into something far more than just a vacation platform or houses near vacation areas, houses in high demand areas.
Yeah, so I think that it started off as like very like the lowest hanging fruit is that it's a minor inconvenience for you to rent out a room and you get some pocket change, and as a business model you're really starting to compete with the hotels, right? Which is one of the
Yeah, yeah.
reasons that there's been a lot of a lot of pushback from cities,
Hotels.
particularly and their inherent hotel industries, the incumbent hotel industries that are there, because it is competition for them, absolutely. um, and I mean, I got to the point where I think 5 years ago I just stopped staying in hotels. Like I was just it's just
Yeah.
when I got used to the experience, like you got a more unique product at the same or cheaper price. And so from my own firsthand experience, I was certainly, it changed my consumption behavior relative to hotels.
Yeah.
And then,
At what point, Jack, did we say, I instead of staying in this nice hotel, I think I'd rather go stay in someone's house? I think it became that way when people stopped using their houses as Airbnbs. These houses were purchased solely as hotels, right? Like
yeah,
as yeah,
yeah,
yeah.
as real estate entrepreneurs go, right? Like we pushed that idea, and and then it got into vacation rental markets, right? The beach,
Hmm.
lakes, the mountains. That all made sense, right? Like there's no hotel in the mountains, but you can run a hotel business because it's a relaxing place to go. There was an obvious draw. And then COVID hit, and then the traveling nurses idea became more and more popular, and just people just wanted to get out of their house for a little while. So that pushed a little bit further, and then more financing came into the market, facilitating all of those really smart, totally logical, great business ideas, entrepreneurial business ideas. And then, but of course, as humans do, we push it, we push it to things to their extreme. And so, kind of I think with the popularity of that and the fact that there were so many people talking about all this money that they made doing short-term rentals, then they tried to just, to to a hammer, everything's a nail, right? So when you get excited about a particular strategy, you just want to apply it absolutely everywhere. And then I think we've probably taken it a little too far at this
Yeah.
point to
I,
exactly what you just described.
I can how many times have you heard, I only have to rent this thing out 4 nights out of 30 to make my mortgage payment. And everything after that is just pure cash flow. Yeah, that's all good when you've got a vacation market with high demand, that really nice product. My wife and I have stayed in some unbelievable Airbnbs, but I'm not going down to Prince George's County, Maryland in, some neighborhood for vacation.
Mm-hmm.
And so I wonder about the business plan, Jack, of those type of folks who, you know, uh, would the house make just a better rental, long term rental, or would it have been a better deal if they purchased it, rehabbed, and sold it? And I find that there are a lot of folks out there who did not buy VRBOs or Airbnbs in these high demand vacation areas, which by the way we'll talk about in a minute, Jack, how many of those areas are seeing steep declines in revenue and in demand. But yeah, man, I'd ask you to maybe consider that, Jack. How many of those, guys out there are in these sort of residential neighborhoods that really don't really make much sense as a short-term rental.
Yeah, I think get rich, super high rent per square foot means, hey, it makes you think, hey, I can make a lot of money really quick. Get rich quick schemes attract knuckleheads. Knuckleheads don't do diligence on economics and running running something as an actual business. And we've had a financing environment that is not screened for that idea.
Yeah.
And so I think that there has been probably not enough diligence on the financing side to screen out short-term rental as the business model. There's been some. I mean, there's been some certain. I would say for like the DSCR loans that we do, short-term rental is an eligible product for
Yeah.
some of the loan purchasers, but not for all.
Yeah.
And everyone's got their take on what the appropriate overlays are for that.
Talk about that. Like, I'm a guy, I go out and, it's, let's say 4 years ago, pre-pandemic, I go find a house. I want to turn it into a short-term rental. How am I getting financing, and what did the financing look like back then?
Pre-pandemic,
Yeah, yeah.
pre-pandemic, pre-pandemic, it was tough.
What would it look like?
I think you were going to your local bank, and your local bank had his eyebrow raised at you because he maybe had stayed in one time, but didn't really consider it like a business yet. For
And
me,
so was it, were you getting financing just like, hey, it's an investment house, this is our investment loan, maybe not asking about the business plan on it. He just saw it more as a rental than a
yeah,
short-term rental.
yeah, I think people, yeah, exactly. It was a rental property, and then if you went and you chose to go do some short-term rental, like, hey, have fun with that. Like,
Oh,
I
got a
mean,
better idea, right? Like
yeah, I'm
the
not going
thing
to
I
check
told you.
in on you, you know.
Right, right,
But
exactly.
and so people just went and did it, but then more and more did it, and then more and more said, hey, here's what I'm doing. Look how smart I am. This is the business plan that I'm going to go do. um,
When did the loan product sort of become available, Jack,
I would say,
for
yeah, that was
that?
like late 2020. Really, it's really kind of a 2021 thing. I would say probably first quarter of 2021, short-term rentals became explicitly eligible under in DSCR loans,
All
and
right.
then
So
a
explain
lot of
what
it
that
happened.
looked like. What
Um,
did that like? Give us a typical scenario. Guy comes, he's got a $400,000 house, maybe needs some rehab. What's he bringing to the table? What were the rates back then? Why did it work so well? Why did the guys who buy up the DSCR loans, why were they like really excited about the product?
I think in the beginning of 2021, Wall Street was generally skeptical of short-term rental, but it was, hey, if you want to go do that, that's fine, but we're going to underwrite the DSCR loan based off of the 12-month market rent.
I see.
Um, and I think that still tends to be the predominant, like the fallback position. But it's become, there's been a little bit of a wave to it. It got more and more and more aggressive throughout the course of 2021. Interest rates were incredibly low. Real estate was going up, and because of the dynamics in the world at the time, short-term rental operators were having great success. So
Mm,
you only heard stories about how everyone was killing it doing short-term
yeah.
rentals. There
Yeah.
wasn't any didn't feel like there was much downside to it. As long as, again, there was some like logic to the location as to why this was a short-term rental property and not just some house in some subdivision.
Yeah.
But then coming into 2022, as interest rates started to increase and the world started to perceive, the industry started to perceive that there's more risk in the world. And as soon as the people started using the R word, recession,
Yeah.
as soon as recession became part of the vocabulary of the forecast, the economic forecast, a number of loan purchasers eliminated short-term rentals altogether and just said, "Hey, that's an operational business. We're not, we think that the world's going to be, hotels are highly volatile businesses in a
Hmm.
recession. Hospitality industry doesn't do as well. This is really hospitality, and we just want to do 12-month resi. We want out of this."
So hold
Um,
on. So can I stop you right there?
mm,
Um, So if a guy comes in, or guy or gal comes in, and they say, "Hey, I'm a big Airbnb person," you're literally walking away from the loan at that point, because
so,
because certain servicers, I guess, are walking away at that point.
Yeah, certain loan purchasers just decided that just wasn't an area they wanted to be in. They didn't frankly care who dealt with
Can
it,
I?
just not
So
with
that
my money.
Yeah, that leads me to the question of, so if I'm a guy who's buying up Airbnbs, if I'm an operator, why would I walk into you and say, "Hey, I'm using this as a short-term rental"? Why wouldn't I just say it's a rental?
And a lot of people started to do that. I think a lot of short-term rental operators got wise to the idea that it wasn't as popular anymore, and they stopped talking about it, stopped bragging about it so much. They kept
Mm,
doing it, but they started talking about it less.
sure.
Um, then I think AirDNA really became an industry standard and an underwriting tool, like an accepted underwriting tool. This is probably late 21, early 22, so kind of
Mm,
in the middle there.
mm.
And so other loan purchasers, though, started using overlays like the AirDNA report to substantiate the idea that this wasn't a knucklehead Airbnb, that this was, you know, in an area that had significant demand for that product, for that service.
Sure.
Um, and they charged a premium for uh, somebody who had short-term rental as a business model, for example. And show me your trailing 12 operating statements. We're still going to get a market rent determination of what the 12-month rent would be, so that we can kind of like put belt and suspenders on the underwriting. And then I think that uh, and so there's been kind of, the market's been kind of in between right there. You can still get a short-term rental, a loan secured by a short-term rental property. You
Yeah.
don't necessarily have to have operating statements. Sometimes you're charged a little bit more. I'd say it's become a thinner market.
How can you have operating statements if you're going to purchase the thing? You have to, you're,
I'm talking about a refi. Yeah.
oh,
If
it's
if
all
if you
refi?
already owned it, yeah,
I
yeah.
see. So you can't, so in some cases you can't get that loan unless you have, unless it's a refi and you've got some sort of history in the place.
Yeah, or they'll make other adjustments if you don't. Like if you have 12 months of operating statements, they'll be more aggressive than if you don't. They'll still do the loan, but on a slightly more conservative terms.
I see.
Yeah.
What's the premium, Jack, for a loan that is a short-term rental?
I think it got to as high as 50 basis points of rate. But today, I don't. There are a couple loan purchasers who have once again gotten comfortable with it. And for high FICO borrowers, there's no premium to the fact that it's a short-term rental.
Mm,
So it's interesting in that some loan purchasers have shunned it altogether. Other purchasers have perceived it as a slightly higher risk product, and other purchasers, loan purchasers, are totally fine with it. So I think, given that we haven't seen that model truly stress tested in the
mm,
past, right? Like the only stress test we had during the Airbnb, the short term rental industry was COVID, which like accelerated everything, right? So there's
mm.
no real stress test. We haven't gone through a recession, since short term rentals have become a thing. And so the jury's out is the point, right? The jury's out on as to how this is going to perform. There's folks who think that it's going to perform like, much closer to single family rentals, which are generally, rents are very resilient even in a downturn. And
Yep.
there's other folks who think that these are hotels, and that it's going to be a high beta, higher risk model, and that you should be underwriting them much more like a hotel than a single family property.
So, based on you know, your knowledge of the market, how many of these people, given, a downturn in sort of the hotel model, I'm going to rent this thing out for, 10 nights a month, and I'm going to make my cash flow, make significant cash flow off of that. Let's say that model, we see a downturn in that. How many of these people, based on their all-in price and sort of the cost of the mortgage each month, their costs, how many of them have a viable model if they have to go to long-term rental based on long-term rental rates?
I think g- generally speaking, the loans were underwritten as if with that kind of like belt and suspenders approach, that if they have to pivot to a long-term rental, they can
Mhm.
still make, in theory, they can still make their debt service payment.
Yeah.
So if now the question is, does their personal financial situation survive if they're living off of this idea, right? Like if they're still
Yeah.
making their car payment and their home mortgage payment, their personal residence payment off of this, and then they have a bad turnover and 2 months, a couple bad turnovers and 2 months of light vacancy. Does that, do they have enough savings to go through a quiet spell? And this
Yeah.
past summer was that for a lot of people. It was a
Speak to that. What do you mean? What did it look like?
well, it was a tougher summer from an occupancy point of view and from a rates point of view. It was not as
Robust.
lucrative. Yeah, exactly, not as robust as it was a year ago, the same time.
Are
And
you speaking, Jack, in vacation markets or just in general?
I think in general, I think there was more short term rentals that hit the market, so there was more supply from that perspective. At a point in time where people were a little less eager from a consumer spending point of view, they were vacationing less, spending less money on their vacations, more more staying in their houses, less just going off to hey, I need a weekend away. And that all cumulatively led to much lower occupancy and daily rates on short-term rentals than previously experienced.
Which I have to believe put downward pressure on rent asking prices as well.
Yeah, exactly. And so obviously, like this is an uber local, like micro, like Airbnb is like a micro market thing, right? You could have like if you have the most special property in some random place, hey, you could have a phenomenal occupancy rate and daily rate, but you could be around the corner with a not so special property and like get and just get crickets. So
yeah, you and I talk about that all the time. I think a lot of what we talk about here on the podcast is, when you paint with a broad brush, real estate is still very local until it's not. And, I think that the same could be said for many markets around the country that like it's real hot in one place and then not so hot in another. We're going to talk about that in a second. But man, I think there's in the time that we have left, there's two things that I find interesting about the time that we're in right now, and particularly the short-term market. If you ask any investor around the country, including yourself, it's a tough time to be finding deals. It's a tough time to be finding inventory to either add as rent to your rental portfolio or to add as a potential flip, and make some quick money off of. Speak to guys all the time that are like, man, when is inventory going to loosen up? And I was doing some research. And we talked about Robert Kiyosaki in the last one. He sent out a tweet September 6th. It said, Airbnb to lead the real estate market crash. If you want a new home, your happy days are around the corner, Jack. Same for rental properties. The best time to get rich is in a crash. Good luck. And so basically, I think that, that led me to go down a bit of a rabbit hole in terms of, why is he saying this? And what is he saying that we're not? And so if you check the show notes for today, I would ask anybody to go out and take a look who's interested in reading more. I did some research, and Redfin put out a pretty good size report. And, Redfin, obviously, Jack, no slouch in the market. I think they probably do some pretty good research. They did a report called Demand for Vacation Homes is down more than 50% from pre-pandemic levels. And they gave the top 10 cities around the country where we are seeing a significant downturn in demand and revenue. Sevierville, Tennessee, which is a vacation town, is number one. Maybe I should, Jack, do you like going from 10 to 1 or from 1 to 10? I'm a 10 to 1 guy. Now that I've given it away, I'll never do that again. 10 to 1 from here on out. We always go big, the opposite direction. So Sevierville, Tennessee, vacation market down 47% year over year. You've got Phoenix, Arizona down 47% year over year. Austin, Texas, Myrtle Beach, San Antonio, Asheville, North Carolina, Salisbury, Maryland, Jack, our hometown. Don't know why anybody would want a vacation there, but okay. Nashville, Tennessee, Denver, Colorado, Breckenridge, Colorado. All down an average of 40% year over year. Now, if I'm an operator in that space, Jack, I don't know how they make the numbers work at that point if they're down 40 to 50%.
Yeah, well, I mean, but the rent per square foot was so high that being down 40% could still be better than your monthly rental rate, right? Like,
Long-term rental rate.
yeah, than your long-term rental rate. And I think that was, that, so, that's the TBD on, like, how this is gonna fall out, or play itself out. Like, those super high performing markets, like Austin, like you could get when I went to visit Austin, I would get a condo, one of these Airbnb condos. There was a whole building and it was
Oh yeah.
nothing but condos, and there was like 90% Airbnbs.
Yep.
And it was nicer than the hotels, better centrally located. And those people were getting like insane. Like I was paying like $300 a night to stay in one of these things, where the monthly rent for that place would have been $2,000,
Sure.
1,800, $2,000. So like they're doing very high occupancy rates. Like they're just murdering it from a cash flow point of view. Even down 40%, they may be fine. Um, I think that there's going to be a big distinction between the markets. Now that said, that's a different set of scenario. That's a different fact pattern than the one that you were talking about, where the guys like where someone's just trying to like, you know, to a hammer everything's a nail, right? Where they're just trying to like short-term rental freaking everything because they're just like, hey, I can get 3 times my rent per square foot if I do it as a short-term rental, and
Mhm.
even if it's down 40%, I'll be fine. And they're just wrong, right? Like, no, you're going to be down 80% actually, because there's nothing interesting about your property, and in any kind of like adverse environment, your house is the first one to not get rented. That guy, he's the walking dead, right? That's TBD as to whether he makes it through the winter.
Yeah, exactly. And if that guy's got 5 or 6 of those things and 2 of them go vacant, he's now gobbling up any cash flow that he has on the other 3, and he's hemorrhaging. And we've seen that play out the way that plays out pretty quickly, Jack. That's like strike 1, strike 2, and strike 3 comes pretty quickly after that, because he ain't reaching in his pocket very long because he doesn't have much to reach into. And I think that is what the Kiyosakis of the world are saying, that like, there's your inventory. You and I talked about this the other night, Jack, where if you're looking for opportunity, you know, I would make a list of all Airbnbs in my town and go after those guys as potential, hey, is this the time
Sellers.
you might be interested in selling? I
Mm-hmm.
don't know how much equity you got there, but I'm buying for pennies on the dollar if you are.
Yeah, I agree, and I think part of his comment was talking about just first time, or not first time home buyers, but just home buyers in general, right? Like that inventory is going to get stressed, or may get stressed operationally. Has been
Mm,
stressed. It's probably going to continue to be stressed operationally. So if you're
mhm.
looking for any motivation in the world, um, that may be the place to get it. Even folks who got very cheap mortgages in the post COVID environment, um, where it's painful for them. They prefer not to pay off a 4% mortgage, but if they have a bunch of equity there, and they're now no longer getting as much cash flow, or they're just tired of operating, right? Because it's an operational business.
Absolutely.
It's much more operationally intensive than running a 12-month rental, single family rental business.
Yep.
So also, I think there's just going to be folks who just get tired of working, tired of dealing with phone calls.
Yeah, when they find out that their projections and their rosy, their get rich quick scheme is probably not as easy as they thought it would be.
And it's
There,
just
I
a
think there's
job.
Yeah, I
Yeah.
just think there's a lot of like low level. I wouldn't even call them operators. These are hobbyists. These are people that have a side hustle in a market, in an asset class that is not a side hustle. You
Right.
cannot you cannot run a hotel as a side hustle.
Right.
With the cleaning, with the grass, with all of those things that come along with short term tenants that tear the place up. I think that that's one of those things where people bet wrong when they thought it was going to be an easy side hustle. And those are the ones, Jack, that fall out the quickest. And that's where the opportunity, I think, will be for guys who are ready to pick up the pieces there.
Yeah, and those people those people can clean the property up and list it and sell it to a homeowner. And though they prefer not to pay off their 4% mortgage, it's not like their personal residence where they need a place to live and there's nowhere to go, right? Like for them, it's just an investment, and and tapping the equity versus, it's just a, hey, how much cash can I get for the house today versus how much cash do I get each year? offset by the work that I have to do to get that cash flow. And
You know
so it's
what's
much
funny,
more
Jack?
of it's much more of a rational economic decision than an emotional one
Sure.
that people who are thinking about selling as their primary residence have to go through.
Yeah, I'm sorry to interrupt. The I think there's a lot more people out there, Jack, that weren't smart enough to get all the cash that they had in these things out.
Well,
And
they
when I
spent
mean
it.
either they spent it or hey, I know I can borrow up to this much, but I got to rehab this place. They probably weren't a great rehabber, so they went over budget, and they've got a significant amount of their own capital tied up in the place. I
Mm-hmm.
don't know what that means in terms of you know uh, I guess the viability, the opportunity to come swoop in and take it. But I think those are the people who get very tired very quickly. I've got my money in this thing. I can't get it out. I got this crazy mortgage on the thing. I can't pay it because I'm not getting the rents that I hope I were. And that is the guys who tend to fall out the fastest. I'll take a loss. Hey man, I had 50 grand of my own money tied up in this thing. Whatever. I can just walk away and be done with it. It was a thing that didn't work out. We saw a lot of that back in the 2007, 8, 9, 10 time period. I think we're going to see similar things there, where people have a lot of cash tied up in these things that they're just willing to walk away from.
Something that I'm curious about is that I think that what you just said is absolutely correct. But in those markets, those tend to be kind of like the high flyer, high beta markets where like
Mm,
big ups and big downs. Like
mm,
your second homes, for example, like during COVID, second home prices went up tremendously. Also, demand for Airbnb went up tremendously. And so there's a lot of Airbnb operators in those areas that are also have a lot of second homes, which, not surprising, right? Vacation areas. But when that Airbnb operator says, throws in the towel and says, hey, I just want to get out of this thing, that market is weaker, much
mm.
weaker, right? Like,
Oh
like
yeah,
luxury second homes, below a little bit, but below luxury, like affordable down here from a risk point of view, right? Like which
sure.
markets fall first. So like
Mm.
if you're getting ready to sell you know, your house that's it's 2 miles from the beach, you were operating as a short-term rental and you just don't want to do it anymore. Those sellers could find themselves putting inventory into a market where there's just no bid. And now you're continuing to pay that mortgage, but you don't have the short-term rental income because you took the thing off the market because you wanted to get, showings with a
Keep it
listing
clean,
agent.
right? Right.
So yeah, in those areas, you could find yourself people are really catching a falling knife where they list the property, they throw in the towel at the same time that everybody else throws the towel in, right? And now we've just
Yep.
got like, you know, a year and a half of inventory sitting there on the market.
Well, it's funny you should bring that up, Jack, because there are, and I'm going to go 10-1 this time, not 1-10. We'll talk about some areas of the country where we're seeing some fairly steep price declines already. In some of these areas, Jack, down to pre-pandemic lows. So back to where the prices were for the asset prior to the pandemic and the meteoric rise. So we've got number 10, Boise, Idaho, down. Let me see if I've got the actual statistics
Is this
here.
a short-term rental list or is this the markets period?
Market in general,
Mm.
but I think
There's a
so these but
correlation.
these yeah, there I think that there's I don't have the story here in front of me, but they were trying to make a correlation between sort of inventory price declines and some of these a fair amount of the inventory coming on as a result of rentals that are coming onto the market. Dallas, Texas, probably one of the hottest economies in the country, but their housing market right now is seeing some a lot. So not only price declines, but people putting their houses on the market and then taking price reductions that I think we're actually seeing around here as well, Jack, where we are. Number 8, Sarasota, Florida, one of the high flyers during the pandemic with everybody moving to Florida. Incidentally, Pensacola is also on the list at number 3. Sevierville, Tennessee, which I mentioned, Nashville, Tennessee, Phoenix, Arizona. So revenue down 14% in Tennessee, but projected, this is short-term revenue, Jack, down 14%, but projected for this year down 32%. Nashville, Tennessee is seeing the largest downturn in their luxury with big price cuts happening. Mentioned San Antonio, Pensacola, no shocker, San Francisco at number 2, and then Austin, Texas, really tough market right now in the country at number 1 for price cuts.
I just financed a short-term rental through a DSCR loan, a $2.4 million gorgeous house in Pensacola that was being operated as a short-term rental. And the person's going to continue to operate it as a short-term rental. Gorgeous water, oceanfront property.
Right on the beach type thing?
Right on the beach, yeah, sick. Like, it's really nice.
And when you think about that, like I have no idea what the weekly rent would be there. I shudder to think. But that might be one of those ones, Jack, where yes, it is luxury, and yes, there is a kind of a niche market for that. It's a great location. It's not that house that's just sitting sort of in the middle of nowhere. That's that one where we say it's location specific. If you want to stay on the beach, there's only so much of that. So, okay, why not? But what are your feelings on that now?
Is $20,000 a month. That was the market rent for it. I was just curious.
When will we be doing the podcast from there?
Absolutely. I just happened to be curious. So those are still viable markets, right? There's a ton of that. Like the Outer Banks of North Carolina is that's become a short-term, that whole place is a short-term rental market. It already was, really.
Yeah.
It's just gotten more and more sophisticated.
Well, but it's gotten more and more sophisticated. It's gotten more and more saturated by less sophisticated operators.
That's fair.
Look, I've been staying in the Outer Banks of North Carolina for the past 15, 20 years. And when I first started staying there, you were renting from a very large property management company who probably was one of 2 or 3 on the entire island. Now I'm renting from like Uncle John, who's got the VRBO one house, and he's, psyched because he thinks he can get it rented up while he's not down there. Right. And that was his hope too, because he doesn't have the money to pay the mortgage when the place isn't getting rented up. So, we got about 3 minutes here. Any last thoughts on sort of the Airbnb market, or the short-term rental market, we should say, and where that might present some opportunities and or pitfalls?
Yeah, I think that people are watching that market. We're watching that market because I think that since it is the most operationally intensive aspect of single family real estate investing, that if we are going to see fallout from operators, right? Like, I feel like that's part of my, mental model, is that whether it's multifamily or single family, you're going to see cracks in the bad operators. They're going to be the ones who throw in the towel first. Maybe there's a macro wave that hits everybody, or a macro wave that hits everybody doesn't show itself all at the same time. The worst operators throw in the towel first. The best operators throw in the towel never or last, right? So I'm always looking for cracks, right? Anecdotes, frankly. So to the extent that any of you guys listening have anecdotes about these topics, I'm super interested in those stories. But I'm watching the short-term rental specifically because it's the most operationally intensive. So one would expect that if there are bad operators, and there are, right? There's always bad operators in every market, that we'll start to see those stories play out first. And that'll be the canary in the coal mine for what may be a larger trend, what may lead to a larger opportunity. And so that's why we're paying specific attention to that area of the business, because I think it's kind of the canary in the coal mine if and when there's going to be some larger waves of distress and therefore corresponding opportunities.
It's a lot of inventory, man, that is out there in that market. And so you're absolutely right that the bad operators will obviously bubble up to the top the quickest. And I'm anxious to see, like you said, will it be sort of a wave or will it be a trickle? But there is just a tremendous amount of inventory in that space. And so we'll only see how it plays out over the next 12 to 24 months. But I think it will be an interesting time for sure, especially if we start to see some recessionary times where, people just aren't going out and staying in short-term rentals, frankly. Yeah, lively discussion. I would actually look forward to having more discussion on this, where we might maybe brought in some guests who are, who are either operators in that market or analysts in that market. I think that would be a really interesting discussion to have, and so we'll do that hopefully in the future. But anything else, Jack?
No, I enjoyed the conversation. I think it's topical. It's something we're paying a lot of attention to. So hope everyone got value out of these ideas.
Yeah, man. Let us know your comments. I'm at Craig@CraigFewer.com. Jack is at Jack@TheDominionGroup.com. You've been listening to Real Investor Radio. Thanks so much for taking the time. We'll talk to you next time.